There seems to be a whole lot of optimism. I look at renminbi at 706 here at the moment. Is that fair value? Is it more renminbi strength, or should we say dollar weakness?
Personally, I have been used to be very pessimistic about this trade deal situation until a few weeks ago. So the biggest breakthrough over the past few weeks, in our view, is that China and the US are willing to discuss in phases. We all know that there are a number of very big fundamental gaps between the two countries, and therefore the probability for an overall deal is very low. But when they start to discuss in phases, there would still be enough room for both parties to agree on certain matters, which is beneficiary for both. So with regards to the CNY, the current spot is quite close to the fixing, and we have been observing a number of changes in the fixing behavior in the last few days. It looks like that fixing after being stuck initially at around 7.08 and later on around 7.007 has started to move at a slightly wider range just based on a model-based approach. So ourselves is also a fixing submission bank, and according to our observation that the artificial element has been reducing over the last few days, and we feel that it could have something to do with the China-US trade negotiation as well. Especially one of the asks is for the US to US is demanding China to change something on the FX policy. In our view, it's highly unlikely for China to commit on any specific level for dollar CNY. So the most likely situation is for China to improve the transparency of the fixing mechanism together with other FX elements.
Yeah, but if you look at real yields here at the moment, let's fire this chart up in China. That's now inching closer to zero. If you scrap up all the effects of pork prices and inflation, you're not going to get that kind of return now for investors here if we continue to see things this way. Does that mean the currency is still too strong then?
The currency is indeed a bit stronger than our fair value analysis. So our fair value is done based on the average level of tariff that US is imposing on China exports to the US. And currently that level on average is about 14%. So when it comes to FX fair value, our calculation for dollar CNY is around 720, which is indeed a bit higher than the current levels. But it's not unlikely or impossible for a partial rollback of the earlier imposed tariff, and therefore we don't feel dollar CNY is very far away from its fair value at this stage as well.
Becky, just talk us through what we've seen from the PBOC just so far this week in terms of course, the loan prime rate, which, as you said, was kept at 4.2%, and today, those open market operations. What does that tell you about the central bank and what it's trying to do as the economy here continues to slow?
The central bank at this stage, they are facing two challenges. The first one is that they need to continue to lower the cost of doing business because, as mentioned earlier, except for the pork prices, when we look at both CPI inflation or PPI, both are pointing to more deflationary pressures instead of inflationary pressures. But on the other hand, PBOC is also bounded by one of these policy targets. If you recall, during the MPC in March this year, one of the key economic indicators or targets for 2019 is for CPI inflation to be at around 3%. And for September, we already have CPI coming out at 3%. And based on the current situation, even if pork price does not really rise a lot further, we might see CPI rising further towards around 3.5% towards year end. That is one of the key elements constraining how much more easing that PBOC could do, especially when it comes to interest rate cuts. So as such, the central bank is using other measures, especially by injecting liquidity to the market. So we do expect some additional liquidity injection later this week via TMLF, or the targeted version of the MLF, which is slightly cheaper. And the PBOC would be ensuring interbank liquidity would be okay without a near-term rate cut in both benchmark, the MLF rate or the OMO rate, in our view.